Good afternoon, everyone. Welcome to Hit the Bid here on December 7th. This is Ty Robbie here through Week 49 Market Watch. Today we're going to run through our charts and see what happened in the markets over the last week and see what opportunities we have to look forward to as we head into Week 49. So let's get started here. First up, we got our February live cattle on the board. We continue to see a solid rally here in the cattle market as both feeders and fats pushed into some bullish territory last week. Nice strong finish above the 50-day moving average in both of these markets is giving the first green light to a potential trend reversal here. At the moment, though, here on this February live cattle, we are still trading below this 20-day high, which is the official signal for the uptrend. This 20-day high here at 228.17 is still the level to beat. We did see a nice strong finish here on Friday, so if the bulls are able to keep this momentum from the last 2 weeks rolling into Monday's session, look for the bulls to attack that level there at 228.17, and then from there start to push up here towards this runaway gap that we had that started at the beginning of this big down move. Bulls have the momentum favoring them at the moment, and a nice strong finish in bullish territory is opening the door to a trend reversal here to get this big picture uptrend back on track. At the moment here, from peak to trough, off of this all-time high at 250.17 down here to this low, we did get about an 18% correction here in this live cattle market, which was a pretty good deep value area. Shaving off nearly 20% is a pretty good corrective move, and looks like we could see this market start to turn higher once again. At the moment, though, we have had a pretty solid rally here over the last 8 trading days, moving about $22 to $23 in a straight line up here above this 50-day moving average. At the moment, could see a little bit of resistance overhead here as we still have some of these sellers left over from the start of this move at the end of October and early November. So we could start to see some resistance as this market pushes back up here towards 230. Prior support here from the early fall should now act as resistance, so look for a little bit of overhead resistance as we push up there into the 230s and towards that overhead gap. However, this cattle market, with this finish here, got a potential trend reversal. We should see a little bit of momentum early this week. If we do get a pullback over the next week or so, look for this market to try and find support at some of these moving averages as we start to retest them from above. Or if we even do pull back down here towards 215 to 220, we should see some more support back down here and pick up some of these bulls that may have missed this first climb out of here. At any rate, looking like this market is going to try and turn this thing around. We'll have to wait and see. If we do start to trade quickly down here below 224, I encourage everyone to be hands off and wait for this market to stabilize, create a little bit of more structure here, put in a higher low, and offer a good risk point to trade this market higher. So we'll have to wait and see how this market acts. If it is going to take a nice run early this week and just continue pushing up towards that gap, look for that momentum to just keep on pushing. But if we are going to see a nice trend reversal here and these cattle markets to continue to rally back up towards these all-time highs, this first dip in a new uptrend is going to be the lowest risk point to get involved for a nice steady climb out of here. So we'll have to wait and see how this market opens up this week. We'll continue to monitor that throughout the early part of week 49. But at the moment here, looking like we could be on the heels of a new uptrend starting again and get this cattle market rolling higher once again after this big correction. Let's jump over to the feeder market now, where we did see a little bit more strength. Same story though, we did see a little bit of resistance here on Monday before the last 4 days of the week just pushing higher right up into new highs. This market also getting a finish here from Thursday and Friday's action here above that 50-day moving average and above this 20-day high, which was back here on the 11th of November as well, around 333. At the moment, this market is pushing up here on this overhead gap that we did create from that weekend of the 24th and 27th of October, where we did get this initial break from this down move. Look for the bulls to try and continue pushing up here. If the bulls are able to get some early bids above 340, we do have a lot of momentum here over the last 2 weeks off this low from the Thanksgiving week. Look for the bulls to try and take some of that momentum early into next week with some bids above 340 to try and chew through this gap. Try and close this gap over here at 348.17. That'll be the first target here for the bulls to the upside. Might be kind of a tough climb here into this overhead resistance as we are getting a little bit extended as this market has ran about $40 in the last 8 trading days. So if this market does start to pull back a little bit, I encourage everyone to be hands off down here below 336.65. Wait for this market to stabilize, pull back, and put in a higher low somewhere either around these major moving averages or in some of these prior demand zones. But at the moment, looking like we are setting up for a nice trend reversal here and to get this market rolling higher. Like that live cattle market, that first pullback in a new uptrend is going to be the lowest risk point to get involved for a nice steady climb out. But we could see some early momentum here above 340 to try and take a little stab higher early. But at the moment, looking like the bulls are serious, and I'm going to try and get this market rolling higher once again. We do have a couple of situations here, whether it's going to hit and run or we're going to get a pullback. We'll just have to wait and see how the early action is this week. We'll continue to monitor that, but looks like we're setting up for a nice little rally here into year end. So look for the bulls to stay tough here and need to continue to defend a lot of these key levels here to keep that uptrend, the possibility of that uptrend intact. But we should see a nice little setup here for a move higher in this cattle market. Jumping over to the corn futures now. March corn futures chopping up all week long. Not a whole lot to be said here, as this corn market remains pretty comfortable here around $4.50. We did see just nice back and forth action all week long, just each day up and down, continuing to chop up here in this 440 to 450 range. Price looks very comfortable here. Don't really expect any big moves until we can get a close either beyond 450 or 440. Even then, this market continues to follow this nice uptrend here, this uptrend line ever since those August lows. But at the moment, we'll have to wait and see if this market continues to follow that trend line or if we're just going to keep staying trading sideways here around 450. In the meantime, don't be placing any big bets. Not really expecting this market to make any big breaks. We expect this choppy, rangy action to continue until we can get a little bit more information or a nice strong close either way. Until then, look for this 440 to 450 range to continue. Crude oil prices showing a little bit of constructive action last week. This market putting in some highs, trying to push up here towards this 50-day moving average. Over the last month or so here, the last 4 times we visited that 50-day moving average, we've been met with a nice little sell-off here, anywhere from 3 to 4 day breakdowns where this market will push off that 50-day moving average lower before settling back up towards the $60 mark. At the moment, looks like that's what's happening. We had this breakdown off that 50 in the middle part of November, and at the moment we are rallying back up into that 50. If this trend continues, we should expect to see a nice little break here off that 50-day moving average, but until we get a close down here below 59.5, shouldn't really confirm that down move. We'll have to wait and see how this early action of this week goes. If we do start to break out of this downtrend channel that we've been trading in over the last month, we could see a nice little short covering rally here. No major breaks or sustained upside is expected. However, this market has generally drifted lower with the random pop every few weeks to months, where this market will see some pretty solid rallies here, whether that's news related or whether it's just a nice short covering rally. Doesn't really matter, but this market will go through these sustained bleeds like this where the market will push lower and then see a nice little break. At the moment, we got some pressure building up last week as we did see this market fail to continue with some downside and finish the week up here at the highs. If the bulls are able to get trading back here above 60.50, look for a nice little short covering rally here. Get this market to pop up here towards the mid 60s and this 200-day moving average. Not really expecting any sustained upside, but a nice little breakout above 60.5 could get this market rolling for a short covering rally and just have a nice little pop higher. However, in the meantime, if we don't see that unfold, look for this market to stay comfortable here around $60 and the high 50s. Over to the equity markets now. Stock market continues to show some constructive action here in the indexes. Certain sectors showing relative strength as well. There's a good pockets of the market where you can find some good deals and some strong stocks, but you have to remain selective here while these major indexes are still kind of stuck trading in the last month's range. The S&P and the Nasdaq still failing to get above these monthly highs from November. Seeing a little bit of resistance up here around 26,000 on the Nasdaq, while the S&P is seeing some resistance at 6,900. Last week, pretty steady action as this market just kind of chopped up in a tight range, slowly pushing higher. Really looks like the pressure is building up here at the moment, and the bulls are going to push this thing out of here and get this uptrend back on track. We need to see this market get a nice strong break here and close above 69.05. Bonus points for heavy volume and close over 1 to 1.5% higher. That should get this follow-through day moving and get the money rolling back into the market and see this thing climbing higher into new all-time highs before the year is up. We did see the Dow futures put in a follow-through day here on the 3rd last week. Nice little strong push. The Dow stocks are definitely being pushed, and definitely where the strength is over the last couple weeks here as the finance sector, banking and financial sector has led the strength here in the Dow index, while the tech has kept a weight on this the Nasdaq and the S&P. Look for those tech stocks to continue rallying though. If we do get some early bids above 69.05 and last week's high, on the Nasdaq above 25,868. We could see this market start to pop. Lots of tight volume here last week, kind of contracting here. If we do see a nice little break, we should see this and get that follow through day we're looking for. We should see these S&P and NASDAQ indexes start to follow the Dow and see these indexes start to rally in towards all-time highs. You get that big picture uptrend back on track. At the moment, this correction here we had down to about only 5.5%. I don't know if you can even call it a correction, but this little pullback here, looking like that's all we're going to get. And looking like these indexes are going to continue rallying here, showing some pretty constructive action. If we get some bids above 6,900 this week, we should see this thing continue to just keep on grinding higher. That's all we got for this week. We'll catch you guys tomorrow night for closing comments. Thank you everyone for tuning in.